right. Well, good morning, everybody, or good afternoon, good evening, wherever you're calling in from. Um, yeah, this market has been crazy, and I know one of the biggest questions a lot of people have in their mind is when is this going to end? My hope is that I can share some stuff with you as far as like technical analysis is concerned, because one of the biggest things that happened during this whole time was people's like, hey, technical analysis didn't really help. What do we do now? Throw technical analysis out the window. And I say, that's probably one of the biggest mistakes you can make. The issue is most people don't know what to look for in technical analysis. And so I want to show you guys a few things that one helped us through seeing what was about to happen. Now, I have to be honest, didn't expect it to be this bad, but we saw the warning signs ahead of time. And then now we're waiting for the warning signs to tell us it's time to start buying. And so we'll talk a little bit about that today with hopes that this can really help guide you through what's going on. I think one of the biggest things is I'm excited that we have technical analysis to guide us. We don't have to be living in the dark as far as this is concerned. Knowing when to buy, when not to buy is so important in this day and age. So um, one of the first questions I like to ask is the stock market random? We can see this as a chart. Is the stock market random? And I think that's a very big question that I used to ask myself before. And I do not believe that the stock market is random. And based on my presentation today, you'll see why I believe that now. Some people think that the stock market is random, but I do not believe that the stock market is random, and we'll talk about that. One of the quotes that I have is I usually say, look, people get excited about huge moves in stocks, but the true credit, in my opinion, goes to those who can train their eyes to see the setup. So Don says that, hey, the stock market is not random. I totally agree with you on that. So the question is, if it's not random, how do we see what the big guys are doing? And when I say big guys, the big institutions or whoever it is that's moving the market, how do we follow their footsteps and see what they do? And so I say, those who've trained their eyes to see the footprints of these people are the ones that I believe deserve the true credit, and technical analysis helps us with that. So what are we going to be talking about today? We'll talk about some candlesticks that are working in today's current market conditions, what warned us about the bear market, and how we're going to use candlesticks literally to guide us through these volatile markets going forward. And so we'll see how that goes. Very quick disclaimer, we're not licensed financial advisors. Trading does involve risk. We're not giving any trade recommendations. Please make sure that you understand that trading does involve some losses, so please be aware of that. Real quickly about myself, I'm a technical strategist. I've been in the accounting finance field for over 17 years. The last 8 years I spent predominantly on analyzing technical analysis. We've used that to help us focus more on companies that are at a really attractive prices with low risk and the opportunity for capital appreciation. So that's what we really focus on, is like how to identify companies, stocks of companies that are at attractive prices. And attractive prices doesn't necessarily mean the lowest price, okay? But price that are attractive where we know that once we get in, there's minimal risk of it keep on going down and a very high potential for it to go up. And so all our research and studies has been literally focused on price movement, has been focused on patterns on the major indices, and we focus on some stocks, ETFs, and so on and so forth. So that's a little bit about myself and what we do. What I want to do is first I want to share with you guys a snapshot of a weekly report that we usually have coming out. We started writing this report at the beginning of January when we first started noticing that, hey, something was beginning to happen in the market based on what we were studying on technical analysis. And so what I want to point your attention to is, if you look at the date, this is an excerpt of the report somewhere around here. And if you look at the date right here, it says June 24, 26. Okay. In that report, one of my first opening statement was what I highlighted over here. When you watch the recording, you can pause it, you can read that part itself. But one of the things I said is like, what we'll be discussing is how the major indices was beginning to tell us that we should be prepared for a potential drop. Okay, now that was on January 24. All right, we said, look, something is happening. The indices are beginning to show us that we should start preparing for a potential drop. And then also we took a look at the VIX and say how the VIX is beginning to shape up with spikes in volatility, which was also beginning to tell us, hey, something bad is about to happen to this market. And so this is what I mean by the market is not random. We were able to see the signs. It's just learning how to see the signs. So what I want to do is I'll show you some of those signs that we saw on the charts of the indices that say, hey, wait a second, something is not right with this market. The next thing is in that same report, a little down later in that report, I said, look, here's the reason why, because one of the things we try to tell people is, look, this is not guessing, hoping, and wishing. What we like to do is always focus on data, and that's all it is. It's just data. The data that we see, what is it communicating? What is this saying to us as technical analysts to kind of see what's going on? And so one of the things I said and why we were saying, look, something is not right with this market, is it says, because there's a market in unison, and I'll show you exactly what I mean by market in unison. We expect the uptrend, which is, everybody was talking about how 2019 was like the best year ever. January was doing well up until we started seeing this. It's like, wait a second, this uptrend is coming to an end, and we need to be ready for a slowdown at best. That was the best thing. Is like the best case scenario is like we're gonna slow down, and in worst case we're gonna reverse. And then if you notice what I said right here, it says the writing is already on the wall. It is time to take profits. It is time to exit position. The market is warning us to take heed. Okay, so these were like strong words. I mean, strong, bold statements that we were making back on the 24th of January. Is like, market is warning us that there's so much huge information that if we already having profit, take your profits. If you have an exit position, start exiting position. Do something right now. Don't just sit back and hope for the best, because this is not going to look good. And so those are kind of things that we talked about. And again, it wasn't guess. It was data that we saw that anybody who knows how to read technical analysis the way we do would have been able to do that. So let me take you to the charts and show you exactly what we saw when that came around. So the first thing is, usually when we do our analysis, we like to look at the daily chart, the weekly chart, and the monthly chart. We look at those 3 time frames. Now, there are subscribers of ours, clients of ours, students of ours that like to trade smaller time frame. Nothing wrong with it. But we said, look, if you want to understand what's really going on in the market, no matter what time frame you're trading on, you got to look at the daily, weekly, and the monthly to kind of give you an idea of what's going on. So after analyzing the daily, weekly, monthly, one of the things that started sticking out was this market in unison concept. And let me actually do this. Let's like type this out. A market in unison. Okay. Now this market in unison concept, some people might already know what it is, some people might not, but it doesn't really matter. The concept is that when on a bigger time frame, especially the weekly and the monthly chart, when candlestick signals are literally the exact same candlestick signal on the 5 major indices that we follow. Now we follow 5 major indices. The first one is the S&P 500, which is the SPX. Okay, so we follow that index, SPX. The second index that we follow is obviously the Dow Jones Industrial Average. Okay, we follow that. Then we also follow the NASDAQ 100. Okay, which is the comp right here. We follow that. We also follow the Russell 2000. A lot of people know about that. And then finally, we follow the Dow Jones Transportation. Okay, those are literally every single week in this report. What we do is like we analyze what's going on those 5 major indices on the daily chart, weekly chart, monthly chart to kind of give us an idea. Hey, are we still healthy? So when everybody's like, oh, this market is in a bubble, this market is a bubble, it's like, well, we were not seeing signs of it until January. And I said, wait a second, something now has happened. So on January 24th, this is the week of January 24 right here. What you're seeing right here, this is the week of January 24. Now, for those of you guys who understand candlestick signal, does anybody know what candlestick signal this is on this day right here, on or at least on that week, the week of January 24? How many people know what that is? Just type it in the chat box. How many people know what type of candlestick signal that is? Because this was on the S&P 500, and we saw that on a weekly chart. Exactly. It's not a dark cloud, actually. It is a Harami signal, a Harami. Okay, if you've ever heard of this, it's a Harami signal. Okay, it looks like a doji, AJ, so it looks like a doji, right? It's not an engulf, it's a Harami signal. And what makes up a Harami signal? Because this is a bearish. How do we know it's bearish? First is that we have a red candle. We always look at the very last one to the right, the very last one to the right. And so the very last one to the right is red. And that tells us that, hey, we should start anticipating. That's all it is, anticipating a bearish trend. Okay, but what it is that it is inside the body of the green candle prior to that, and that's what a Harami signal is. Okay. Um, okay, can I slow down my speaking rate so you can absorb what I'm saying? All right, John, I apologize. Well, thank you for saying that. You know, I have been known to be speaking fast. When I get excited, that's what typically happens. So I'll try to slow it down so that you can absorb what I'm saying. So thank you for sharing that, John. Okay, so let me slow down a little bit. We follow, so you got the 5 indexes that we talk about, right? John, you got that, right? The 5 indexes is the Dow Jones, we have the NASDAQ, we have the S&P 500, we have the Russell, and we have the Dow Jones Transportation, correct? All right, so you got that. Okay, so now that we have that, what we do is we want to make sure that we look at the daily chart, weekly chart, and the monthly chart. We're always trying to analyze that. What are the candlesticks saying about them? And one of the unique things, and you can mark this down going forward, is on the higher time frame, especially the weekly chart or the monthly chart. If you start seeing the exact same signal appear on the weekly or the monthly chart, that is a huge warning sign, bullish or bearish. Okay, so if they have the exact same candlestick signal, then that tells you, hey, something positive. I mean, the market is about to rally. And then vice versa, if you see the exact same on the bearish side, you know something big is about to happen. Does that make sense? So right here, this is the S&P 500. We had a Harami signal. I'm going to write Harami right here. We had a Harami signal. A Harami signal in this case was a bearish signal. And one of the unique things about a Harami signal is it lets you know, look, the uptrend is in jeopardy. Okay, the uptrend is in jeopardy. That's one of the biggest things that a Harami signal lets you know. And so in this case, because it's a bearish signal, obviously if it's a bullish Harami, then it would say the downtrend is in. You usually find a bullish Harami signal after a downtrend. And basically it's just telling you, hey, the downtrend is in jeopardy. Okay, meaning it's coming to an end soon. And so in this case, seeing this on the weekly chart, it's like, wait a second, especially since this is a weekly chart, we need to look for the next few weeks, if not months to come, this market is going to end up struggling. Make sense? All right. So how does a Harami signal work again? Basically, so take these 2 candles that I have here, these exact 2 candlestick signals right here. Okay. What you want to see is if you look at the body, this is the top and the bottom of this green candle. And then if you go to the top and bottom of this red candle, don't include the wicks. We don't want to include the wicks. We just want to look at the body. When you start seeing, in this case, this is a bearish version. The red is in between the top and the bottom, okay, of the green candle on its left-hand side. That is a Harami signal, okay? So this would be a Harami signal right here. So you might say, hey, wait a second, why is it that we had a Harami signal here, but price kept on going up, but over here, we were so concerned? Well, because the difference was, if you go back to this week, yes, it showed up on the S&P, but it didn't show up on the 5 major indices, all 5 of them. In this case, what made this one an alarm to us was that not only did it show up here, but when we went to all the other ones, it affected them as well. And yes, we ignore the wicks when we're looking at the Harami signal. We ignore the wicks. Make sense? So let me show you. Let's see here. If we go to the Dow Jones, this is the same week of the Dow Jones. Can you see right here? The exact same signal. Okay? The exact same signal. And so Chris will say, hey, 3 weeks ago earlier, 9 weeks, 18 weeks, yes, we had them, but here's the thing. If you go back, you will see that maybe the Dow had it or the S&P had it, but the other 5 major indices did not have it, okay? And so what I'm saying is, like, what really sounded the alarm was that in 1 week, all 5 major indices had the exact same signal. Not one had a, bullish engulfing or bearish engulfing, and another one had a dark cloud, and then no, they were all the exact same signal. And that's what we call the market in unison. Make sense? And so, yes, this showed up here. If this was just by itself, it's okay, yeah, let's pay attention, something to look out for, and all that kind of stuff. But when all 5 major indices start showing the exact same thing, I'm telling you, you have to look at this as this is a huge warning sign. And that's what we saw. And that's why we wrote that in our report and saying, look, something is not right. And that's why it was a bold statement when we said, take profits, exit position, do whatever you have to do. The market is warning us, take heed, because we saw this on the S&P 500. That was the bearish Harami signal. If we go to the Dow Jones Industrial, we had the bearish Harami signal. If you went to the NASDAQ, you had the exact same signal on that week, a bearish Harami signal. If you go to the Russell, the exact same signal, a bearish Harami signal. Okay. And if you go to the Dow Transportation, the exact same signal. So just like James said, run out of Dodge. I mean, this is the market saying, look, something is wrong. And so when we saw that, that was why we said, look, something is not right. Something is not right. And then I went to the daily chart. And when we go to the daily chart, we had another bearish signal on the daily chart, which is a huge warning sign. And that is called something we call the hilltop pattern. Okay, we call this the hilltop pattern. Now, the official terminology for this is called the outside candle. So if you've ever heard of an outside candle, it's the exact same thing. It's just that we call it the hilltop pattern. So if you were to go online, you say, hey, what's an outside candle? That's what happened on that Friday, which was the 24th of January. So we saw this on a daily chart. So wait a second, this hilltop is so huge. And the reason why we call it hilltop, for those of you guys who are wondering, what is it exactly? What makes up the hilltop is that we have a higher high. Okay, so we want to have a higher high. Now you can include wicks on this one. On the Harami, you do not include wicks, but on the hilltop, we include the wicks. So you look at the highest high, you compare it to the candle before it. You want it to be higher. That's where we got the HI from. On that same candle, you want to make sure that you have a lower low to the prior low. That's what the LL stands for. So that's where we came up with hill in there. Okay. So when you have a candle where we have a higher high and a lower low to the prior candle, you have a hill top. Okay. And then the reason why we came up with the word top was, obviously you want it to occur at the top of a trend. Okay. Now, in this case, Don, this was also a bearish Harami. So in this case, we had a number of information telling us the weekly chart has already warned us that something bad was about to happen. Then we come to the daily chart. And on the daily chart, we're seeing a hilltop, which is a huge warning sign. Plus, we have a bearish engulfing signal, which is another huge warning sign. And this is why I say, look, the stock market was not random. It's not random. I can't remember who's mentioned it earlier. I think it was Don or Ron that said it earlier. The stock market is not random. There were warning signs that told us something is about to happen. Okay. And so seeing all this made us say, wow, something bad is about to take place. And what ended up happening is, I have to be honest, even I did not expect this to be this bad. But I knew something was wrong. And what ended up happening was that market is exactly where we see it to be today. So a lot of people are wondering, where's the bottom? How do we identify the bottom? What we do? We'll talk about that soon. But at least I just wanted to point out, look, this is not random. Okay, anybody that thinks it's random is missing out on what technical analysis can show us. In this case, we only even focus on candlesticks, just kind of tell us what's going on. All right. What I would like to do now is show you something else. Here is a software that we own now. We actually purchased this software from the previous owner. And in our software, what we did was we took some of our technical analysis skill sets, and we use it to improve the software. And what we did was just look, what we wanted to do was try to learn how to, well, not try to learn, but like try to help people see when a market is trending, when it's not trending. And so what we did was we took some of our, a proprietary analysis of the market, and we asked the programmer, to look, can you get the software to put in these algorithms that can do this, this, and this, where it can tell us that, look, when a market is ready to go down based on what we analyze and what we know to be looking for to kind of give us heads up that the market is going down, show us this. And when it's ready to go up, show us this. And so what I want to show you here is what this software also. So once you understand candlesticks, which we teach, then it's like, look, once you apply that with the software, it literally puts you in a comfortable zone where it's like you don't have to worry about what's going on out there anymore. And so everybody now is asking, where's this bottom? Where's this bottom? And I'm going to show you how one of the things that we're looking for to kind of tell us, hey, we've hit the bottom, or at least the market is getting ready to trend higher. As of today, if you were to ask me, is the market ready to trend higher? The answer is no. The answer is no. Okay, I understand that the bailout money is in there. And one of the things that I'm going to talk about later, we have like weekly webinars that we do where we are watching to see how all this money that's being pumped into the system, when is it going to really take effect? When are we going to see the results of that on the chart? And so one of the things we'll be doing going forward is talking about, hey, how the first bailout that we saw back in the financial crisis, how that helped, when did they announce it, to when the market actually started, rallying based on the results of these announcements. The timing is so critical, because right now a lot of people are saying buy because it's cheap. Well, if you bought because it's cheap, price is still going lower. And people are like, we don't know where the bottom is. That's not necessarily true. We can find those bottoms. But I digress a little bit. Let me go back to this software right here, because what I want to show you here is, if you notice, here's what I want to show you. Let me zoom in for a little bit, because what this software is doing is allowing us to see what is going on with the market. Now, you see this red, section up here, and then down here, you see it checkered red and green, red and green. What it's basically doing is we went in and we said, look, we asked the programmer to kind of program it so that when we know that the market is in a downtrend, right, what we want to see is a red section up here as well as a red section down here. Okay, that's what we want to see. And Jules is asking, can you still make money in this market? Absolutely. You just have to know how to position yourself on the right side of it. Pun intended, right side, right? That's the name of our company, Right Side Trading. All right, you just have to position yourself on the right side of the market. What we did was, with this software, what it tells us is, look, when we have a red section up here and a red section down here, expect markets to go down. That's what it's doing. So as of today, or at least Friday, because this date is populated after the market closes, like about 6:30 Eastern time after the market closes, you'll see this populate, right? Right now, as of Friday, we have a red bar up there and a red bar down here. This tells us don't buy anything. Okay, we shouldn't be expected to buy anything. What we want to see when we know that the market has hit bottom and the market is getting ready to trend, and I won't even say the absolute bottom, but at least a bottom where we can expect a decent trend, a bottom when we can expect a decent trend before we start buying. What we want to see is a green up here and a green down here. That's what we need to see. So kind of like if you look right here where we had a green over here and a green down here, that gave us this trend that we saw right here. Okay. So that's the first thing. It's like we don't have to sit down and guess. I remember on February 28th, when the market was down here on this day, there were a lot of people saying, oh, this is the bottom, this is the bottom. And it paused for a second. It was the bottom, okay, because it paused, but then eventually resumed going back down again. But we knew that even though it was a bottom, and I'll tell you why, we knew that, hey, wait a second, it's not time to be buying yet. And so I actually was telling all our subscribers, all our clients, and say, look, don't buy. I know that this looks like a bottom right now, but because of what the software is telling us, it's like it's not time to buy. Now, how did we know that it wasn't time to buy? Simply because even though we had a green here, what this was showing was still red. Okay. And so because it wasn't a green up here and a green down here, we knew it wasn't time to buy. And so when everybody was buying, oh yeah, and it was very interesting because the next couple of days or next 3 days, market looked like it was rallying higher. And people's like, are you sure, Wally, we shouldn't? I said, look, the software will guide us through this. We've already factored in all the analysis that we need to factor in. And the mere fact that it's not signaling that we should buy, we need to stay out of the market. Okay. Now, if anybody was short in the market back here because it was red up here and red down here, once you see a green, once you see a green bar, then what it's telling you is to place your stops. That's all it's telling you. So if you see a red up here and you shorted, so let's say you were shorting the stock, okay, which is the predominant trend that we're in right now. If you see a red at the top and a green at the bottom, all this tells us is place your stops. That's it. It's not telling you to short or buy. It's saying place your stop. You want to place your stop at the top of the red candle, at the top of the candle. That's all it's telling you. So imagine if you were shorting the stock when it first started going down. Okay. So on this day right here, we had a red up here, red down here. We know it's time to short. If you were shorted on this candle right here, we had a red at the top and a green down here. What this would have told us is place your stop. Okay. If you had placed your stop, what would have happened is you would have captured that profit right there. Okay. Market attempted to go up. People say, hey, do we start buying? I say, no, don't buy because you want to see a green and a green. We didn't get it. As soon as it turned red and red again, which is somewhere around here, guess what? You start shorting again. So for people who say, hey, is there any ways for us to be able to short this market or make money in this market? Well, you had this opportunity first, and then now, guess what? You still had this opportunity here. And what this is saying is since the time that it told us to start shorting right here, somewhere around here, guess what? For now, when it was on this candle, when it was red up here, red down here, you didn't have to do anything. On this candle right here, when it was red up there, red down there, nothing. On this candle right here, when it was red up there, red down here, you didn't have to worry about anything. Now on this candle right here, it was red up here, but it was green over here. What do we do now? When it got green down here, they say, hey, look, place a stop just in case. You would have placed your stop right there. Next day, it became red and red again. All right, everything is fine again. Then all of a sudden, we had all these volatility up and down. Hey, here's another green candle. Doesn't mean you should buy, but guess what? If you were shorted, place your stop up there. That's all this is telling us. Then it turned down again, and then it started again with another red and green. It's like, okay, adjust your stop to this candle right here. And then yesterday, market is still going down. And so the fact that we have a red here and a red here tells us that, look, this trend is still in the direction that it needs to be in. Your stop will still be on the last green candle that we see over here. And that's where your stop is. And if you had already been shorting this for a while, you're probably one of those people that's really, really excited about what's going on. Okay. We know that when the market is ready to trend back up, so I've heard a lot of experts, oh, we started buying. I remember one expert buying a whole bunch of Caterpillar stock over here. And I was like, I don't know if I would be doing that. And now it's gone even further down. Okay. The idea here is we want to make sure that we are watching this very closely. A lot of people are asking, hey, what about airlines companies? Should we start buying airline companies? Well, just take any stock from the airline. Here is Southwest Airlines. You could take a stock like this and say, look, from the time that we had a red up here and a red down here, we haven't been given a buy signal yet. Okay. It's short and run, exactly. These are all short term, by the way. Okay, these are all short term, but that's the idea. Is like, look, we don't have like anybody that's like, oh, let me buy bullish. I mean, unless you would, intraday trading, because there's going to be opportunities intraday. That's fine. But if you're more like a swing trader, like we are, where we're more interested in catching the trend, even if the trend is 2-3 weeks long, but we want to capture a solid trend, then this helps tremendously. Because right now, even when all this was happening, it was like, people like, oh, Warren Buffett is in airline stocks. Maybe I should go buy this because it's cheap right now. Well, this stock was cheap when it was at $55, and then it got cheaper at 45. All right, and then it got cheaper at 35, and guess what? It's almost down to $30 now. It's like, why would you keep on buying just because it's cheap when information tells us, no, it's not time to be buying it. Can you imagine all these green candles and how that would have confused people, you know, whether they should buy or they shouldn't buy? No, that's, all here is like, okay, look, all we need to do is we have a red up here and a green down here. All we need to do is place our stops. That's it. But no buying. No buying, right? And then now it's still red and red. We can't be buying anything. Okay, we can't be buying anything. Somebody wants to take a look at oil. Let's take a look at oil. All right. Can we look at Boeing too? Absolutely, we can look at that too. Let's look at oil. Look at what's going on with oil. Should we be buying oil right now? Okay. Should we be buying oil right now? The answer is what? We have a red up here and what down here? We have a green. So what is this telling us now? All this is telling us like, look, place your stop. So this is where you have a choice. You can go in there and say, look, where do I want to place my stop? Do I want to place my stop on this red candle where it's first signaling that we need to place our stop? Okay, right here. Or do we want to place our stop on this green candle? It's up to you. Either way is fine. Okay. But at the end of the day, what this software is telling us, like, look, you can't be buying oil right now. Do you know how many people I know it's like, oh, oil has dropped significantly. Let's go ahead and start buying oil. No, we should not be buying oil. We only had like a week to even buy oil for a very short period of time, which was right here. And then right after that, it told us to get out. I know people who are still holding on to oil stocks right now. That, oh, it's going to come back. It's going to come back. We can avoid all the guessing game by seeing what this is doing. So at this point in time, somewhere around here, all it's telling us to do is say, hey, place your stop. That's all. Place your stop. You would have still kept on going down. Right here, it said place your stop on this green candle, but it's not telling us to buy right now. Does that make sense? It's not telling us to buy anything right now. So if you were to ask me, hey, Wally, would you be buying all stocks tomorrow? Absolutely not. Now, the beauty of this is, guess what? Because it's green, I say, oh, it's very easy. If this is really going to start turning over, we'll see the green down here and we'll see the green up here. Okay. And that's kind of like what we want to see. Now, somebody asked about, let's see, Boeing. Let's go to Boeing. I actually have Boeing up here too. Okay. So here's Boeing. What should we be doing with Boeing right now? How many people say, hey, we should start buying Boeing because it's cheap? Boeing was a $350 stock up here. Now is a $95 stock. Isn't that cheap, guys? Come on, let's buy it. No, you don't buy it. There's nothing. I mean, when it was down to 250, people are like, oh, it's cheap. Let's buy Boeing, especially on this green candle right here. Oh, let's buy Boeing. And now it's down. They've lost over 50% if you bought it back then. And the whole time, what is the software telling us? Do not buy. Okay. If you bought a put option, that's great. That's where you want to be, because especially look at what it's saying right now. We have a red here and a red here, which means, look, expect more downside to come. That's what it's telling us. But it's not time to be buying Boeing. And so all these people that are waiting around, look, I'm waiting around for Boeing too. Trust me, I want to buy Boeing. Boeing used to be a $460 something stock. And now at $95, I was like, man, I can't wait for when the software tells me it's time to start buying. Okay, I can't wait for it to tell me when it's time to start buying. So here we go. Back in February, yes. So this short period of time, Boeing was, it had a small short rally during that time. Okay, this right here, this is when the software said you should buy. And obviously, you had a green here and a green down here. You would have bought right there. Okay, then it had a red. Let me see if I can zoom in. Oh yes, Ron, I will definitely talk about Tesla. Okay, let me zoom in if I can, so I can remember who was that asked this question. We'll do that. But at the end of the day, we had, this is what Boeing was doing. So over here, it told us to buy. We had the green here, great, stop buying, right? Price started going up, 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 up. Right here, it showed a red. So somewhere around here, it said, place your stop. You're to place your stop, okay? So now that you place your stop, it's not telling you to get out, it's just saying place a stop. So one or two things will either happen. Either you'll see a red and red, which tells you once you see red and red, you absolutely have to get out of the trade. I mean, don't ever stay in a trade if you're bullish. If you're bullish, you trade into the upside, you're bullish, and you see a red and red, this takes away the guessing. Like, just sell it. Get the heck out of there, right? But if you're bullish and you see a green and red, it's just telling you place your stop. So one or two things will happen. Is either you'll get stopped out, which is totally fine, or it will turn into a red and red, which means, look, you need to be out of that trade. Okay, you need to be out of that trade. So in this case, that's what it told us to do right here. Somewhere over here, it said place your stop. You would have been stopped out somewhere around here right before all this took place. That makes sense? Okay. Right here, price was going down. It said place your stop over here. If you even got stopped out somewhere around here, say, hey, you can jump back into the short side and right here. So right now it's saying, hey, place a stop. You would not have been stopped out. It said place a stop. You would not have been stopped out. Place a stop. You would not have been stopped out. It's like, oh, snap, this thing is getting ready to do what? Go even further down. Does that make sense? Let me do a couple more because this is really cool. I mean, again, this is why in 2008, when the financial market crisis happened, I lost everything. I was one of those guys. I was a real estate investor. I had no idea how to read the market. But because of what happened back then, when I was like, 1 minute you see one expert on TV saying, oh, we head into recession, another expert coming, no, we're not heading into recession. I was so concerned. I didn't know who to believe. I literally did not know who to believe. And I just remember that feeling and said, look, I don't want to have to rely on other people telling me what to do anymore. I want to be able to see with my own two eyes. And so that's what started me in the whole technical analysis thing. So for the last 8 years, I've been studying technical analysis like crazy. And then now we're just taking what we've known over those 8 years and put it into the software to kind of help us do what we need to do. Okay. Frank is saying, is the software more accurate with stocks over a certain price? Are stocks under $10 and $5 too volatile? It depends. So that's a very good question, Scott. Thank you for asking that question. So the easy answer is like, no, it works the same. Okay, it's looking for trends, it's analyzing the candlesticks, it's looking at indicators and saying, look, is this ready to go or is it not ready to go? That's the first thing it's done. But aside from the software, obviously you will find more volatility in lower price stocks than you would in higher price stocks. Make sense, Scott? Okay, so regardless of any type of technical analysis whatsoever, it's just the fact that a lower price stocks has more volatility than a higher price stock. And the simple reason why is because, look, anybody can jump into a lower price stock. We could make the price volatile, but higher price stock, if those stock moves, is because it's the big institutions moving it, not necessarily us retail trader. Okay, but it still works the same. Okay, it's exactly the same thing too. All right, it's just that one of the things that we also teach in our courses that we teach is like, how do you identify a good stock? Okay, regardless of the price. How do you buy a good stock, a stock that is ready to trend as opposed to ones that are going to be choppy? So once you understand, hey, here's a stock, you understand how to find stocks that are good stocks. Remember what I said, my whole research has been on how to identify good companies at attractive prices, okay, minimal risk, that has huge upside potential. That's the whole thing. So that's where it starts from. Once you identify that, then you plug it into the software and say, hey, okay, this software can do this, this, and this. Now we also have search scan criteria to help us with some of these scans of stocks that we need to find that can help us do this easier. So we also have that too. But the idea, and to answer your question, is just, it works the same, but you got to understand, if you jump into a bad company, then you're going to have a lot of volatility. It has nothing to do with the software. It has to do with the company itself. All right. So a lot of questions, and I know I'm running out of time, so let me do this. I know there was a couple more people who wanted to see some other stocks. Who was it? Let's see. So Tesla. Somebody said Tesla. Let's look at Tesla. So here's Tesla, guys. All right. So back in December 2019, we actually talked about Tesla getting ready to go higher. Okay. Now what you can see is because like this shows you, information over the 30 days, but we actually started buying Tesla around $350, which is when we saw this right here, did really well, sold it somewhere around this price right here. We got stopped out, sold it. I think we bought it at 350 and sold Tesla around 739. We sold Tesla. Okay, so we bought it at 350, sold it at 739. Now it went all the way up to 900, and actually when it went up to 900, my wife was telling me, sell everything, sell everything. Okay, and I was like, no, I'm gonna hold on. And then it dropped, and I was like, you know what, let me just go ahead and take my profits, and I'm glad that I did. Okay, I actually just placed a stop is what I did. And why did I place a stop? I placed a stop simply because let me see if I can zoom in right here. You'll see exactly why I placed a stop on this. Did I use options on Tesla? No, I personally don't trade options. I've got to the point where I don't need to trade options because of, just how accurate this has been for us that I don't worry so much. It's just one less thing I have to worry about. When I first started, my account was small. I used to trade options. I didn't have this software then, but I used to trade options. But as my account got bigger and bigger and bigger, I realized that, hey, I could find good companies, all right, apply this whole strategy to this, and our system to this, and make sure that, hey, you know what, I'm in good stocks. And that's pretty much what we've done. And I don't have to worry about, things that are going on with option. And it used to be where it was capital accumulation, capital accumulation. Now it's more like protecting the capital that I have. So I'm more concerned about losing all this money that I have as opposed to, like, making so much money. And so I make sure that I get into the safer trades as much as possible. But you can see right here, what you don't see is what the software was showing back here. But right here, which is kind of interesting, right here was when it hit 9:30, and I remember people said, should we sell? Should we sell? I said, look, I don't know about selling, because even my wife was saying sell. I said, look, I don't want to sell, but I'll place my stop right here. Okay, and why did I place my stop there? Because I had a green up here and a red down here. And I said, if I get stopped out, I get stopped out, and that's about it. And that's exactly what happened. Now, does this work on intraday? No, unfortunately, it does not work on intraday. However, when you know that you have a stock that is in a downtrending mode based on the software, then it allows you to see what direction should you be primarily focused on intraday. Okay, that's kind of like what that is. But anyway, so that's why I saw Tesla there. And then I was like, look, even when we had an opportunity to get back into Tesla, you would have been able to, for those who wanted to, would have been able to capture it. But I didn't do it because, look, I've already made my money off of Tesla. I was happy. But it started rallying up again. And then right about here would be where you would have placed your stop before the free fall began. So is this a daily chart? Absolutely. This is a daily chart. But can you guys see how this is, again, it's really trying to take the guesswork. And that was my biggest thing, is like, take the guesswork out of it. I want to see data. Data is all I want to see. And what we did was we improved the software to kind of show us, when should we be entering a trade? When should we not be entering a trade? And so on and so forth. Okay. One last one, Boeing. We already talked about Boeing. Let me show you this feature right here. This is our scan, in a sense. And so what we did was, you can go in and you can actually input, based on whatever type of pool of stocks that you want. In this case, we went with the IBD 50. Okay, so we took all the IBD, anybody who knows IBD 50, we took the IBD 50 stocks for 2020, and so, okay, let's monitor those and kind of see which ones is actually going to tell us. And so what you see here is, if you wanted to find stocks that go up, all right, you can sort it by this. If you want to go with the ones that go down, you can sort it by this right here. So if you're looking for stocks that goes up, so what it does is, like, let's say I sorted this by update. What it would do then is say, hey, look, some of these stocks are beginning to show up. EDU is beginning to show up. Okay, so how do I know they're beginning to show up? It's like, hey, pay attention. And that's all it is like, pay attention. Is because of the date right here, March 20th. March 24th, March 24th, March 30th. So these are stocks that's like, look, you want to put these on your watch list. That's all it's saying. Put it on your watch list. And then what we're waiting for is what? We're waiting to see if we have a green on the bar. Okay. And so once you have these on your watch list, I mean, it's within the close proximity of when these stocks should probably start doing something, but the software is picking up that, hey, certain movements are beginning to happen. Just watch it and pay attention to it. Likewise, if we wanted to do the downside one, we can click on the down rate and say, look, show me the stocks that are ready to go down. Okay. And so, for instance, you can go with JBL, which is what I have up here already. And what happens is, I can go to that chart. You can see that JBL is already in a downtrend, right? It's already in a downtrend, everything's going down. But here's what it's saying is like, look, over the next coming days, we expect this to even be going further down. So what I'm waiting for now is like, should I start shorting this stock? And the answer is not yet. You know why? Because I have a green down here. Oops, that's an ugly drawing. I have a green down here, and I have a red up here. But me knowing that, hey, this is a stock that could easily start turning down, all I need now is for me to see a red down here. We already had a red up here, so we're fine. So now I just waiting. It might happen on Monday. It might happen on Tuesday. It might happen sometime next week. It might not happen at all. But the thing is, I know that once that happens, me knowing that, hey, this stock, based on the algorithms that we program into the software, saying, look, this stock has a tendency to go down. Once I see it red over here, I know it's time to start shorting this. Okay, that's what we want to find. All right. And so the idea here is we want to see, and then the other thing is what I didn't talk about is conditions. Okay. So once we have a red up here and a red down here, my thing then is like, how strong is this short? If I'm going to be short in this, how strong is it? If you notice right now, what it's saying is what? It's fair. So fair to us means that, look, okay, it's setting up. That's all it is. It's like it's setting up, but you don't want to start shorting. Okay. Maybe if you were long, you want to take your profits or something like that. But fair doesn't tell us that it's time to actually start shorting. What we want to see is you'll see when the condition says strong, okay, so we already know stocks based on our scans that tells us that, hey, things about to happen. Then we see, if we're shorting, we see red up here, red down here, and then we want the condition to be strong. These are the things that then tells us like, wow, we are ready to really rock and roll. Okay, so for the bullish side, what we're looking for is like we want a strong condition in the market, and we have a green up here and a green up here. When we see that, when we see a green up here, green down here, and the condition is strong, we know we've hit bottom for now. Okay, and that's kind of like what we're doing. But going back to this again, look, we have all kinds of, like, we've had some of our subscribers come in and they put in all their different types of, lists. So you can come in here, you can put in your own list. This is the IBD. Some people go by this. We can go to maybe the next page. People who are looking for stocks that have liquidity. If you want to trade weekly options, we have that in there. So, if you're looking for just, all kinds of stuff, but you can literally go in there, add in your own list. Some people make it private, some people make it public. All these are the ones that people have made public to, to the software community. But you can, keep yours private if you want. There's nothing wrong with that. And that's kind of like what we're trying to do. And so, long story short, we don't have to guess what the market is trying to do. And we know when the market is ready to do something and when it's not ready to do something. And that's the beauty of this. We know what to wait for when the market is getting ready to go. Right now, you can see it says the market is fair right now. Actually, if I come over here, I believe that, yeah, it's still fair. So it's like, look, it's not really ready to be, first of all, we can't even be buying anything, okay? And so, but the fact that it's getting fair is like, look, it's not a strong downtrend. So see, when I come over here on this date right here on February 21st, okay, when the downtrend began, notice how the condition changed to strong. So this was when it was like, hey, things about to get really, really nasty, okay? As opposed to right now, would I, if I wanted to short, I could short right now, but it's like, it's not as strong as it was up here. So this is why we're paying attention to see, hey, maybe we'll get a all-time bottom. We don't know that yet. Maybe we'll get a short-term rally, a relief rally. We don't know that yet. But the one thing we know is, look, if you're short, be very careful at this point in time. But definitely you don't want to stop buying anything just yet, just because it's cheap. Okay. All right. So somebody said, is there any reason why you're not showing the upper color before? Yes, because what we do is like, it's like about a 30 to 60 day window, and then that's it. Okay. So it kind of moves each day. So each day that passes by, it drops off the previous day. Okay. That's all. One of the reasons why I did this, because I wanted people to focus on what's happening right now, as opposed to anything else. Does anyone need to download this software onto their computer? It's web-based, so you don't need to download anything. All you have to do is just log in. You just log in, you go, I'll give you the link, which, by the way, I probably should start doing now because I didn't even realize how much time has flew by. Let me just do this. Here's my offer to you guys. First, here's what some people are saying about the Magenta trade. Is, look, I've attended, this guy said, look, I just finished up watching your Web 99 sessions, and I have to say, out of all the classes and webinars I've attended over the many years of trading, I have never really understood or grasped the concept on when I should exit a trade until now. And that's because of using the software. Here's what this guy said. Look, I've studied candlesticks to some extent, but your teaching really put rhyme to reason. He's talking about, this marketing unison. You can see right here, this was on January 15, 2020. But seeing all this stuff right here, look, you've done something that was, far more I could learn on my own. Okay. When we talked about the VIX, I didn't get a chance to talk about the VIX, how we started seeing those spikes. This is what this guy is saying. Look, everything that's happening right now, we saw this coming last week because we saw the things that are in the market. So what I'm going to do is, if you go to this site right now, rightside trading.com, you can, see the offer that we have. Basically, the features of the software, you'll be able to get that, where it includes the algorithm indicator that I showed you, which is that red and green at the top and bottom. The trend conditions, which is huge. One of the things I didn't get to talk about was the calendar. So you can go in there, you can find the calendar of stocks for the next 30 days and say, hey, here are the stocks I want to put on my watch list. And all you got to do is just, let that happen. We even have alerts that can alert you, say, hey, after these watch lists, let me know when they're ready to start, turning green and green, so I don't have to be sitting down there every single day. Another good feature that I didn't get a chance to talk about was the pre and post earnings. Okay, so this is a huge aspect of our trading is, what happens to stocks, not on earnings day itself, but before earnings and after earnings. Those are kind of things we talk about. And then the variable screener is something else that kind of just like, look, over the next 10 days, over the next 20 days, over the next 30 days, what are the chances of this stock doing this kind of stuff? So it's a seasonality filter in this case. And yes, it includes the seasonality. That's what this variable screener is, by the way, Steve, okay? That's what that is. So what I'm gonna do is I'm gonna offer that to you guys for the price of $497 for the next 6 months, okay? Typically people access the software for about, $299 per month. But what I'm gonna do is I'm gonna give this to you guys for the next 6 months at the price of $497. Okay, so you'll get 6 months access. We'll have the training modules that we're going to include in that as well. And most importantly is you'll be able to come to my weekly webinars, because on these weekly webinars, we talk about what we see in the markets. We'll talk about how to use the software. If you find stocks that you are looking at and you bring that to the webinar, we analyze that live with everybody else so that you can see what's going on, especially in this market where everybody's wondering, should we be buying? We were not buying anything. Anybody who knows me is like, we're not buying anything. We're not buying anything. We're not buying anything. And it was a very easy decision for us to make simply because we saw what the software was doing. Is there any discount for veterans? Very good question, Jules. Not yet, not yet. So maybe what will happen is after you sign up, if you decide to stay with us, then we will, do that. But please, guys, don't let price stop you, okay? Don't let price stop you. We have financing available for those who might want to take financing as well on this. So please be aware there's installment payments that you can do. We did this to make it easy, especially nowadays. I know a lot of people blew up a lot of accounts nowadays. So we understand that. That's why we cut the price down so much. And we also offer financing that you guys can at least get started. And we know that if you use this the right way, you can make the money to make it back. Now, the other thing I'm also going to do is I'm going to invite you to a webinar, a live webinar that I'm doing on Tuesday night, okay, about candlesticks, because I think it's important to learn candlesticks in and of itself. So I'm having a live webinar. You can attend this webinar at no cost once you purchase this package right here, okay? Also, I'm going to give you my volatility video, the VIX volatility video, okay? So that now you can see what we're looking at when we say VIX is beginning to spike. We also know when VIX is getting ready to end, okay? So we are watching the VIX right now, and there's some signs that say, look, once you combine the VIX with what's going on in the market, with what software is saying, we have a surety that something is positive is going to happen. And then I'm also going to give you my right side report for the next 6 months, I believe. Again, for the next 6 months, you'll be getting this. We come out with the right side report every single week. The next one is going out tomorrow. So you'll be able to see my whole analysis of what's going on. And then for the next 6 weeks, next 6 months, every week you'll be getting this right side report. You'll be attending all the webinars. You'll see how we use this in real time to help us with that. But again, you get to learn about candlesticks, which is huge. You also get the VIX volatility video, so you never have to worry about, hey, we saw the VIX getting ready to spike in January. Most people say, oh, the VIX has spiked to all-time highs now, but we were seeing those things prior to that. What is a startup account? Do you really need 500 to 1,000? It really is up to you. Okay, so depending on your account size, you have to pick certain stocks, obviously, but the process is still the same. I do have to wrap it up. I've run out of time. Does this work on Forex pairs? Absolutely. It definitely works on Forex pairs. So that's another thing I didn't get to talk about. Okay, but yes, it works on Forex pairs as well too. So this is definitely something you want to grab a hold on. But guys, finance available. We cut the price down really well to kind of guide you. Thank you so much. It does not work on futures, but we are working on getting futures in there. Thank you so much, Jeanette. Really appreciate you guys for being on the call today. We'll help you guys. Make sure you contact us. I'm going to go ahead and turn it over to Jeanette again.